Hi friends, Simit here from InformedTrades.com. In today's video, we're going to provide an introduction to income investing. Let's get started. Okay, key points. We'll start by defining what income investing is. Then we'll take a look at the basic types of income investments individual investors can make. Government bonds are the benchmark. We'll explain why that is and how income investors may wish to consider what the government bond is yielding when making their income investing decisions. And finally, compounding is the key to wealth with income investing. We'll take a look at what that means and why that is the case. Okay, what is income investing? It's basically investments that promise to pay you on a fixed basis so that you can develop another income stream based just on investing. So maybe, for instance, you have a job and that's your primary stream of income. Income investing is taking some of the money you have from your job, putting it in some investment that yields monthly, quarterly, annually, some additional fixed income. And that way you can sort of, and the more and more you do that, the more you know that you're going to have, $100, $1,000, $10,000, $1 million coming in every month, quarter, year, whatever the frequency is. That's basically the idea behind income investing. It's, you do have to obviously have some income to begin with, some capital basically to that you can invest in income investing, but it's associated with, you're earning money and you're not doing anything. Now, of course, you had to get that money somehow, and for most people it involves working for something. And of course, you have to research what income investments to put your money in, so there actually is a fair amount of work in that regard, but it's not like having a job, for instance. So a lot of people associate income investing as building another stream of income, solidifying, adding to your wealth security, and sort of developing an income stream that way. Okay, types of income investments. So what are some investments that will yield a fixed payment, regardless of what else is going on in the market, on a regular basis? Okay, and there's basically four categories of income investments. There's bonds, and this is generally regarded as the safest, which is basically a loan. You give a loan to the local government, municipal government, to national government, state governments, whoever, or corporations. And they say, all right, we will pay you back the principal, meaning the amount you loaned us, plus interest. And the interest will be 7% a year for however long it takes. And we'll have another video that delves into more about bonds and all the terms that bond investors need to know and how you can invest in them and all that stuff. But that's basically one type of investment that's generally regarded as the safest of opportunities. Next up are dividend stocks. And this is basically a stock that earns income and sends some of the income back to its shareholders. So now that's usually the case, and that's sort of the idea. Some stocks will actually not earn income, will take out debt and then pay that debt to as a dividend. So, but generally the idea is you're investing in companies that are earning a profit, that have positive cash flow, and are sharing some of this cash flow with their investors. So there is always a change as a company will, or this is a bit more risky in that one, you have the stock price that's going to be more volatile, and there's also the change that the company's business operations may change, and they may not always be able to continue paying a dividend. So it's a little bit riskier, but there's also some great opportunities. We'll talk more about dividend stocks in another video. Covered calls. Let's say, easiest to explain covered call with an example. Let's say you own a stock, stock ABC. You bought it at $100. You can sell what's called a call option, which you can sell to someone else, the right, but not the obligation to buy that stock. So let's say you sell to someone, you say, I have a stock, I bought it at 100, the price today is 100. I'm going to sell a covered call, which gives someone the option to buy the stock at $101. So, and they may only pay you a small amount, $1, $2, whatever, for that option. If the price goes down, then no one's going to exercise that option, and you just made 50 cents. If the option does get exercised, let's say price goes to 110, and the buyer says, yes, I want to buy it from you at 101, like we agreed, then you earn $1 profit. You bought it at 100, you're selling at 101. You earn that $1 profit plus what they paid you for the right to buy the covered call. So it's a way of generating potential income. It can limit downsides, and it's also going to limit upsides, but you're at least getting that income from selling covered calls. So it's a little more of an advanced strategy, but people who like options and are looking to, they may be holding a position for a long time or have that intention of holding a position for a long time, you can sort of, if you're writing covered calls and they're not getting exercised, you can build an income stream that way. Lastly is alternatives. These are things that are not on conventional financial exchanges. If you're familiar with Prosper and Lending Club, those are two prime examples where you're loaning money directly to people. So it's similar to a bond in that regard, but you're almost like a credit card where you get a higher interest. You're loaning money directly to individuals. There's also things like rental income. If you have a property, you can rent it out. If you have a car, you can use a service like GetAround, rent it out that way. And of course, there's off-exchange investments, private equity deals. For instance, you could invest in a business and they'll pay you a fixed amount per sale they make. So let's say they sell some bicycle or something like that, and the bicycle sells for $150. They'll pay you $5 for every bicycle they sell if you invest in their company. So that's that's another way of looking at an income investment. Alternatives are, with the exception of Prosper and Lending Club and something like GetAround for renting out your car, Airbnb for renting out a room in your home. Some of the others are a little harder, a little more exclusive. You have to have quite a bit of money. But with the internet, a lot of these rules are changing, and there's more and more opportunities coming up that are related to or will be categorized as an alternative investment. Government bonds are the benchmark. So the idea that government bonds are the benchmark is that or I should say national or supranational government bonds, is that the government theoretically always has the ability to pay you back. Because worst case scenario, they can print money and pay off their bonds that way. And of course, they could also raise taxes to 100% or whatever. In theory, they could do all these things. So that's sort of why government bonds are the benchmark. And you can say, all right, I can loan it to the government. I at least know that if I give them $50, I will get $50 back, regardless of what that $50 may actually be worth. But that's sort of a baseline for how you can loan it out. And if the government's paying you 3%, for instance, you can say, all right, well, if I loan to a private company, they should be paying more than that. And if I invest in a dividend stock, I should get somehow, whether it's through stock appreciation or through stock appreciation and in combination of the dividend, I should be earning more. I should be compensated for taking that additional risk. So that's sort of what you want to think in mind. And when you're evaluating corporate bonds or municipal bonds or dividend stocks, you sort of want to view, or you can view, a lot of investors do, government bonds as a benchmark and say, all right, well, this stock might only be yielding 0.25% dividend, so not much at all, but I think the stock price is going to go up a lot, so it's worth it. Or if you think, the stock price probably isn't going to go much, and it's only yielding 0.5%, and so it's just not good relative to, I can invest in a government bond and get 3%, then why don't I do that? Right now, it's an interesting time because government bonds are yielding close to zero, in some instances actually negative. So it's kind of interesting in that regard, but historically, many other times, government bonds yield 1%, 2%, even up to 6, 7%, or sometimes even more, depending upon what economy you're in. So that's something to consider, something to bear in mind. What are the government bonds yielding? Okay, and probably last, the most important point for income investing, compounding is the key. Compounding basically means, let's say I invest in a government bond and it's yielding 7% per year. So I invest $1,000 and they say they're going to pay me 7% per year. That means I'm getting $70 per year as an income from this bond investment. Now, what do I do with that $70? I could reinvest it into more government bonds that are yielding, or more bonds, whatever type of bonds, that are yielding 7%. And that's the key. If I do that, if I keep reinvesting the income that I get into more income yielding investments, then over time, a small investment can become a very large one. Here is, you can see this chart illustrates it all really. If you take $125 a month and you just put it in a bank that's not yielding any interest, in 30 years, you'll get a little under $50,000. But if you invest in something that's yielding 6% every month and you keep reinvesting that income that you get, it becomes like $125,000. And if you get 10% on it, you can see there's a big growth curve here. So you go from under 50 to close to 300, maybe 275, right around here. And that's sort of the key of of income investing, I should say. compound interest. So it takes time. You know, this here is the 30-year strategy. So income investing, for that reason, is also often associated with long-term planning. Security, planning for the future, planning for retirement, those types of things. Income investing obviously can help you in the short term as well in terms of having another income, but if you're thinking long term in terms of building security, income investing can help quite a bit because compounding is where the returns really start to kick in, but it takes time. That's the key. You just have to be disciplined and patiently continually reinvest the income you're getting. That's about it for our introduction to income investing. Of course, we'll have a whole bunch of other videos that delve into greater detail on some of the topics that we presented in this video. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading and investing, and we'll see you next time. Take care.